What's up, everyone? How's it going? Welcome to today's market analysis or trade recap episode. Today is Thursday, May the 29th, and as you can see, today we took two trades and we got stopped out on both of them. Perhaps this is a patience issue, perhaps it's just the market. We'll find all about that here today with this live market analysis and trade recap session. So let's go ahead and get straight into this. And let's start out by looking at the overall context on the market here on ES today, and we'll do the same for NQ. So on ES, what we're seeing is that we came into the market after a really bullish upwards move, and the reasoning for that, like we mentioned in previous videos, is because of Nvidia earnings and different tariff news, but the main cause was because of Nvidia earnings. Now, what we found out yesterday using our pre-market and preferable outcomes is that typically when something like this happens, we do a retracement and continue to go upwards. Today, this was unfortunately not the case. What happened today was we simply filled that imbalance from the Nvidia earnings, and the upwards move has not continued. And that's also pretty typical outcome, right? And something very cool about this was that our news liquidity had been swept later in the day. So just by keeping that in mind, we should have kept our eyesight open that we might come back down to this news liquidity in which we might sweep out. But then again, we do have to see. So came into the market was pushing downwards, and market opened and it continued to do so. So we were in a partially bearish bias, but because we came towards our V2 levels and also towards these demand zones and liquidity on Bookmap, we had something in the back of our head saying that potentially this might be the area where price might reverse and start heading upwards again, because positive news might continue to yield positive results within the market. What I mean by that is if you had spectacular news, we go up one day, potentially balance out a little bit, and then continue going upwards. But upon further notice, we can find out that that was not the case here today, and we can delve further into that as well. But let's go on NQ and discuss what was there as well. So if you go on to 30-minute, it was essentially the same thing. We headed up pretty heavily with that Nvidia news, and we went to almost this main liquidity level above, where we started to see that sell-off occur. Now, coming into the market open, it was the exact same that we're seeing on ES. Selling pressure was apparent, but we were at V2 levels, and we were also at a 30-minute demand zone. And with that, we had it in the back of our heads that price might actually reverse here and continue going towards the upside. But as you can see, that was not what happened. We'll take a look into all of this on the footprint chart and dive later in via Bookmap. But first, I just wanted to give an overall context within the market. So now let's go on to the 5-minute and get into the details, right? Let's pull up the market open time frame on Bookmap. Again, shout out to Alex with Think with Bookmap. Great resource. I highly recommend you guys to check out. The link is in the description for his live stream, and great resource to save a lot of money instead of paying for Bookmap. Highly recommend you guys to check it out. But if we head towards our time of market open, we see that what price does is it actually comes and sweeps this lower liquidity that is pretty significant within the market. And what happened yesterday was that once we had swept that liquidity, we made a reversal within the market. So the thing in the back of our head, aligning with our higher time frame analysis, showed up, but we should have seen the momentum during that time frame. we saw price get into this liquidity level, and let's get into that area here on footprint, which is right around here, somewhere here. We came to those relative levels, and what we started to see was that large amounts of seller delta was occurring that kept pushing this down and down. Our first signal that price was not going to reverse here was simply that this level got broken into within its first touch. But that is not always the case. We can sometimes just take it and reverse, right? Because we have that liquidity necessary from all these passive orders to head towards the upside. And taking a look at this long that we took right around 855, one reason that we should have stayed flat in this trade was because there was medium impact news at 9 a.m. and we did not follow that 5-minute interval because we saw the setup. If we had followed that rule, this setup would have been avoided. But honestly, the setup was not the worst of setups. And why that is, it's because we swept that Bookmap liquidity. Buyers started to come in with strength, as you can see here on footprint as well. We are seeing distributed volume as well as distributed and aggressive buying delta with multiple buying imbalances within the candle, as you can notice here. Very bullish candle from that. And we do make a small low volume node here within this candle here where price may want to reject off of, and that was our holding position for the trade, right? We entered long because we saw price sweep these lower liquidity levels, especially on Bookmap, and at those levels we did place decent amount of selling delta down at the bottom here as well, and these two areas were getting absorbed, as you can see by this candle, but they're pretty spread apart, so technically we should have been a bit more careful because of the spread out nature, but that does seem to be reasonable seeing as how the liquidity has moved down. So not bad, but just unfortunate, I guess. We'll get into potentially why this would have failed, but we saw these longs and buyers coming in very aggressively after we saw all these sellers get absorbed. And we had this already higher time frame bias that were in the V2 levels. We swept Bookmap liquidity. We're inside of a 30-minute demand zone on NQ. And all of those together provided us with the bias that price may want to reverse from this area and at least head back up towards this level where we need to seek further reaction. And price did not do that at all. If you can see here on Bookmap as well, we see aggressive buying come in with heavy strength. And on top of that, we have barriers forming as well, buying barriers. And that buying barrier is located within this low volume node. All of that is supporting our trade. But a reason that it may not have played out like we would have wanted it to is because, just take a look on Bookmap. Is there any area really that price can target? Not really. Maybe these 5,950 levels. But then again, that is only 100 contracts. It's nothing too significant, right? And there's nothing really above that 5,950 area, which is only here. Which is only around here, right? There's nothing above that 5,950 area that's really target on Bookmap. So realistically, we should have came back to our basics and stood by fundamental principle that if there's nothing for price to target within your trade on order flow basis, then you should stay flat until you see a trade that works with your targets. Even if the longs came through, we should have stayed flat But typically, we always target some sort of liquidity here on Bookmap. If we don't reject aggressively, but that could have been a great reason that we should not have entered the longs. But this trade was not a bad trade at all. Order flow did align with it other than that one target, but it was just unfortunate that sellers continued to come through with strength, and potentially we could have exited when we saw that sellers were coming down into our area with distributed aggression with decent volume as well. We came down to this level. Prior to the touch of this low volume node and barrier, we're seeing distributing selling going on. And inside of our area, we're seeing large amounts of selling delta go on too. Sellers are moving the price down immediately after price has moved the price up. We want to see continuation within the longs. And when sellers come in with such strength and break our supporting barrier so quickly, that should have stood as an exit signal to us, and we should have exited maybe around 5932.5, which would have cut us down and managed our risk much more effectively, making us take only a 19 tick stop on ES instead of a 30 tick stop. But it's all lessons learned, and we can learn more as time progresses. We should have just taken that invalidation signal and exited because of it. Setup overall was not bad at all. If we had a target here above, if liquidity started forming above these highs or had formed above these highs, then that trade would have been a pretty good setup that would have aligned with many different factors, which likely would have played out. But because there was no target, that is going to be my reasoning as to why this trade primarily failed. Now, we came down again. Now, the fact that we came down again put me in a seller heavy and focused bias, right? We saw selling coming in very aggressively, and you can notice it here as well. Sellers had made an imbalance, distributed aggressive selling within footprint with multiple imbalances, and that candle was a 29,000 contract traded candle. Very significant candle right here. Now, this entire upwards area of the candle was filled with low volume. So the two low volume nodes that I'll mark out is here and also here. But this I wouldn't necessarily count because I'd want to see action up till there, because that's the main low volume. Because we did see low volume here that did get filled pretty immediately. But we started coming down with heavy strength. Now you may be wondering, why did I enter short there? Well, let's take a look at what happened right around that time at 9:10. Well, take a look at what we see right here. This liquidity, what happened to that liquidity? That liquidity actually inversed, and we have this barrier that is located right above price now. And we took this as a sign that there are passive sellers sitting within the market. And honestly, that's not a bad idea at all, right? And we do have targets below as well. We even have main liquidity down below. Our minimum target should have been 5,900, simply because we have that target down there. But main liquidity would make sense as well, knowing as how that was news main liquidity. And if you look at it, this does seem to play out pretty nicely. We do head down there, but our execution was not the greatest. We see that price comes up to this barrier. Now, we should not have entered because we want to see clear signs of absorption before we enter. Now here, what we see happening is that we do see some sort of buyer absorption. But look at this candle. Volume is distributed throughout the candle, and buying is also distributed throughout the candle. We have buying here and we also have buying here. The more we go up, the more buying that we have in terms of buyers versus sellers. And in the next candle, we went up a bit more. We saw even more buyers at these highs. Now, as we're coming down, we came down after all these buyers started entering in. And you can see that clearly on footprint, right? We tap into this barrier. Sellers start to come in after we have absorbed those buyers at the top. And that gave me enough confidence that we might start heading down from there. And we went down 34 ticks. That is a pretty solid move. But that selling could not continue. So the overall setup for the second trade is not bad as to what I'm seeing, but there's likely points of invalidation in which we could have exited. And that is what I'm going to be looking for and seeing if that is the case. And realistically, a potential exit should have potentially been found down there. And potentially even here as well, seeing as how that buying barrier has moved up with price. And that would be right around 9:30, in which we were in the trade, and that was the point where we did get stopped out as well. I want to see if you can find the exit in profit. Right here, we saw a large amount of buyers coming in with heavy volume around 95915, and that was at 920. So I want to go to 920, 925-ish area and see what happened there. Come here, this is right at the candle close, so we would still be in there for the majority of this candle. That's very likely. But the point where we start to break through this candle with such an imbalance like so, that could likely be the point of exit. So say we exit somewhere around here, around 5920. That would have only put us down 12 ticks instead of 42 ticks. I think that the reason that we stayed in this trade was because passive sellers were still apparent here at this area. But when we look at it, this level of passive selling that we're seeing is nothing too significant at all. Targets are still towards the downside, which is in our favor. But since we're seeing sellers get absorbed and buyers come in with heavy volume, that is invalidating our trade and is a signal that we might want to get out before we see further movement upwards. Now, it wouldn't be an area at all to take a long because seller momentum is still towards the downside, but just not the right area to take continued shorts. And even if it was previously, likely could have exited for a minor loss. Now, these two trades weren't bad setups in any case. It's likely just a matter of cutting out between those who manage their risk very effectively and get out right when they see invalidation for break even or minor loss, and to those who don't notice invalidation and stay in for the whole ride, which is not the best at all times. We want to manage risk actively when we're in a trade. So what we noticed from both of these trades, manage risk more effectively, watch very carefully for invalidation signals, and wait and only play with where targets are on Bookmap. So that's the takeaways from these two trades. Now, what I want to do before we conclude this video is to see what is happening here at these highs that caused price to dump with such volume and strength. Although this move is out of our trading session, let's see if there's anything here at this move right around 9:55. Okay, so what I notice happening is that at these highs, the highs keep going up, but what we're seeing at these highs is that passive sellers are apparent here. And now this one time what happened is that we had broken above these passive selling and have tapped into further passive selling. 5935, 5935. And that's perfect. We made liquidity to a decent extent here at 5935. That's with pretty great strength. And right around that 950 time, buyers are just continuously pushing price upwards. Nothing really here telling us to essentially sell. You do see that selling occurred there, but buying barrier is there. So you wouldn't necessarily long in any of this position, but you wouldn't short at it. But now here, as we're entering around that 5935 level into this strong selling barrier, you do see targets below, primarily at this 59125 levels and 5900 levels. So I want to see how price reacts at these highs. What we see happening is that a large volume of buyers are entering into the market. And you can see that here as well. A large amount of buyers entering within the market. Now, if they can push above this 5935 level, great, buying can continue. But the fact that we're not doing that is very seller. It's showing us that sellers may come in. Now, what I want to see now is to see some of these micro barriers start to break. And if that is the case, now here, look at this. We start to come down again, but we have this passive buying barrier. If that starts to break, then sells may be taken. So let's see what happens right in a second. Selling starts to break through. Potentially an entry at 5928 or 5926-ish area. So say we do enter around 5926 area here, which is pretty late entry, but can place our stop above that 5935 level or at the 5935 level. So for 38 points of risk, oh yeah, that would not be the greatest risk to reward at all. Let's just see what happens. We break that barrier, we come up. Now we're just trading within barriers. Now the fact that this upper barrier is breaking, not the best sign. Seeing large amounts of buying volume here, but we see that the buying volume is getting shut down as well. And realistically, it's likely that a very good setup could have been placed here right at 1010. Right around there. But we do seem to reverse again. Huh. And we break through nicely. And this was honestly the turning point right here. We break through this upper barrier, break through that 2.7 area. And since we broke through that 2.7 area, that would have been an exit. Which honestly would have put us at a 10-tick loss again. So we'd have been down 3 trades on the day. So honestly, today was not the best, would not have been the best day for our strategy. But if we were patient and waited for the most confirmation setups, potentially it could have been decent. But yeah, let's just see what happened at the second high touch. We just see sellers coming in aggressively. Yeah, honestly, nothing really there for us to trade off of. Potentially a short set likely would have got stopped or failed. But here, and what would have caught this big move, there was nothing really there other than potentially absorption here at the highs. And we do see that absorption with high volume, so potentially shorts could have been taking place. But what I'm looking forward to more is a low volume area around there. So I want to see if price can retrace into this low volume area after that sell move, in which a retracement play might have been made. And honestly, that right there would have been absolutely perfect setup at 10:50 p.m. a.m. We see price come down, come and retrace back into that low volume area, or relative to that area, right at 10:50. 10:50 would have likely been the best setup that we could have potentially found. Right here. We see those buying come in very aggressively with large amounts of volume, and you see large amounts of buyer delta occurring as well. Now, take a look at what's happening here as well. Buyers are coming in with heavy strength. And what do we see here at the top? We see seller icebergs, or not icebergs. We see seller icebergs and more icebergs showing up there, showing that price is likely to have gotten absorbed at that location. Now, if selling starts to occur like such, now selling is coming in very aggressively. Just take a look at how aggressive it occurs. Selling is coming with a very strong aggressiveness, as you see here on Bookmap. I'll give you an entry at 912. With the stop over that barrier around 921-ish area, or 922, keeping it as wide as possible. And we can target at least 5,900, which would have been at least a 1-to-1 trade that would have played out very quickly and very instantly with the high Sharpe ratio, I believe, which means that this would have been the best setup here for today. And the reasoning for that is that most of the values and variables within the footprint line up very effectively. Now for the other two trades, things do line up pretty nicely. It's just that we likely needed more confirmation from price. We needed targets for the first trade. And for the second trade, we needed to see seller momentum and aggression occur, which simply did not show up. And we actually saw seller absorption occur, which would have been an invalidation signal for us to exit early. So realistically, this day should have been flat or with one trade instead of two. But that's going to be all here for today. This was longer than it was supposed to be, but I was analyzing this live as well with you guys. So good thing that we figured out certain things that we did right and certain things that we did wrong. If you have any questions, please go ahead and join the Discord. The link is in the description down below. Everything is completely free. It's a great community that I believe each and every person can gain something out of. On top of that, if you want to gain access to charts, to footprint charts and other order flow tools like this for completely free, just to start practicing with the 15-minute delay, please go ahead and use the link in the description down below to get your hands onto Addis Charts. Addis Charts is a great platform that we have partnered with, and it's a great tool that traders can benefit. Once you have started to gain practice with these tools and you've started to develop your own edge with these tools, then you can purchase your plans. And if you do purchase something with those plans, it will help me out as well. So keep that in mind. Thank you so much for watching this video. I'll see you guys later today for the pre-day analysis for tomorrow. And I'll see you guys tomorrow for the next trade recap and market analysis episode. I guess I'll see you guys then. Goodbye.